3 weeks ago, I gave you a list of AI giants too cheap to ignore, growth stocks to buy that have since jumped 13% on average, crushing the market's return. But as high as those can go, the real potential is in the small caps, the AI penny stocks flying under the radar, but with the potential to deliver 10 and even 20 times your money. These are the startups, the underdogs that nobody is watching yet. In fact, one of these stocks I highlighted last year is already up 214% and is just getting started. I'll show you the entire list of 14 AI penny stocks, show you how to find the best stocks to buy, then reveal the 7 penny stocks to buy right now, all with the return to make even a small investment a $1 million payday. First up is one we've been following a while, one with even NVIDIA buying the shares, Recursion Pharmaceuticals, ticker RXRX. And while Recursion is down 25% over the last year, NVIDIA is still banking on the potential with 7.7 million shares worth almost $39 million. That potential is there because Recursion could revolutionize drug discovery through its AI language model, performing complex drug discovery to lower costs and cure diseases that have evaded us for centuries. Its model works by running drug compound testing through an AI engine built on massive datasets, enabling it to screen out and find the compounds that won't work, basically to find the failures faster and spend less time, so it can move on to the drugs that will work. Folks, big pharma companies like Merck and Eli Lilly are facing a patent cliff amounting to nearly $200 billion in lost revenue, all the while pulling back on their own research spending to find new drugs. So through the use of AI, Recursion could dramatically lower costs for drug development, an advantage that would be worth tens of billions of dollars to these big pharma companies. The company has 6 programs in pipeline trials, 4 of which are in phase 1 or 2 and expecting results within the next year. It's inked partnerships with major drug makers like Roche and Bayer, and like most biotech stocks, the potential is there, but it comes in these fits and starts when a company announces a breakthrough or an FDA approval or a deal with another company. That helps to explain why revenue is expected up 20% this year, but to jump 50% next. But here the company is still unprofitable, and with cash flow uglier than the morning after your first girlfriend dumped you. But the potential market for this and that valuation, very much worth the risk for investors. Now, it's not nearly as cheap as some of the other AI penny stocks we'll talk about, adjusting for that growth. In fact, a 1.29 times adjusted price to sales, it's one of the more expensive on the list, but I think this one is surprises over the next year. And we're just getting started, but I want to walk you through how I put this list together, how to find the best AI penny stocks to buy, so you can do this with any theme, anytime you want. Now, I first dug through all the research, compiling a mega list of all AI-related stocks. That research uncovered 60 AI-related stocks between our prior video and this one. Then I found the market cap, the total value of the shares in each stock, separated out the penny stocks, those under $1 or $2 billion market cap. And remember, that's because that's the true definition of a penny stock, those smaller companies with the potential to multiply your money. It has nothing to do with stock price here, folks. You wouldn't call $38 billion beer giant Ambev a penny stock, and it sure as hell isn't going to make you rich with that revenue growth of just 6% a year. But here it is trading for $2.40 a share. On the other hand, here we have Velocity Financial, a tiny $675 million company with 36% sales growth last year, all but ignored by investors because of the $18 stock price. Nation, do not make the mistake of thinking that stock price means anything. I know I did when I first started investing while in the Marine Corps, thinking that a low stock price meant a great deal. Instead, that $2 stock that I thought was going to be a rocket just turned out to be a rock. I'll show you what to look for in these penny stocks later, but here it's all about that market cap, that company size, and the growth that is going to make you rich. Next here, I added the price to sales valuation multiple, and that price to sales is my favorite measure for growth stock valuation. How many dollars for every dollar of sales are investors paying, and how expensive is the stock? For example, right now, investors are paying a price to sales multiple of 21 times for shares of Broadcom, ticker AVGO. And that's pretty expensive considering you can get shares of Synopsys, ticker SNPS, for just 11.4 times its sales. But here's the catch. Broadcom is growing its sales at a 21% pace, while Synopsys is only growing at about half that fast, forecasted growth of 10.4% this year. Wouldn't you pay a little bit more for a company growing at a 21% pace rather than 10% each year? So that's why I dug into the analyst forecast for growth on each of these stocks, adjusting the price valuation by that growth to reveal the best deals in these AI stocks. Doing that, you can see Broadcom at 1.01 adjusted price to sales is now the better deal versus Synopsys. And while I love Broadcom for its lock on that AI infrastructure theme, it didn't even make the top 45 names of the best deals in the group, and at $1.1 trillion, it isn't the kind of penny stock that is going to 10x your money. Back to our list though, and I've highlighted Big Bear Holdings, ticker BBAI, since it was a tiny $400 million company, It's already a 230% return, but still a penny stock potential at just $1.4 billion market cap. Big Bear is in one of my favorite themes within AI, helping companies make sense of that overload in data. They help companies organize and visualize raw data to turn it into actionable insights. And this is key and really the first step in AI, just managing all the data collected and then being able to make sense of it. That's helped Big Bear grow its customer base and a $206 million backlog for revenue. And it's produced some major wins recently, including exclusivity with L3 Harris and a $32 million award across 3 contracts with the U.S. Army, a relationship that has grown 235% in just the last 3 years. Now, expectations for growth here have come down to just 6% this year before rebounding 12% growth next year, but that prior growth proves it can beat these forecasts. Shares aren't as cheap as our top 5 penny stocks I'm going to highlight next, but are worth a look. I'm going to show you the biggest risks investing in these penny stocks next, but staying up to date on all this means staying up to date with all the news and analysis. For that, I want to personally invite you to get the Weekly Bowtie, our free weekly newsletter with all the stock market news, strategies, and trends you need to see. Each week before the market opens, I'm going to show you what I'm watching and the stocks that could highlight the week. It's all totally free, just something I like to do for all you out there in the community, so look for that sign-up link below. We're into the truly small penny stocks now with an $84 million one-stop systems, ticker OSS, a stock I highlighted last year at $2.60 a share. One-Stop designs and manufactures transportable computer systems with AI capabilities. It's a prime contractor to the U.S. military for its rugged and mobile designs. Lately, it's also emphasized expanding its commercial platforms to keep that growth going. Those key drivers, defense contracts and now commercial, have driven a 21% annualized sales growth over the last 5 years. OSS sees the military moving quickly into AI to maintain that tactical advantage and has announced some strategic wins lately. The company announced its first multi-year, multi-million-dollar contract with the U.S. government in November with expected revenue up to $3.5 million over the next 3 years. It's also signed 3 major contracts with the U.S. military over the last year, worth nearly $8 million in revenue. And this is one of the slower growth stories at just 7.7% expected sales growth, but trading at just 1.6 times price to sales. That one puts this one in the top 5 penny stocks on that adjusted valuation. We're not even halfway through our list of AI penny stocks and some must-see stocks to go, but I don't want you to think that these kinds of moonshot investments are without risk. In fact, there are a lot of risks here that you need to know about. And maybe the most obvious clue to that is the fact that these are still penny stocks under $1 billion market cap, when other AI stocks like NVIDIA have jumped 1,400% over the last 5 years. And Palantir's 500% surge just in the last year has taken it from $56 billion to a $327 billion market cap. You got to wonder why these companies have been left behind. Now, another problem here is you're not going to find the same level of analysis or forecasts for these stocks. Among the 14 AI penny stocks, many had no analyst covering them, and others just 1 or 2 analysts with forecasts. Now, spending more than a decade as an analyst myself, you know what I think of them here. Most analysts I knew couldn't forecast the weather if they were standing outside, but it is helpful to have more eyes on a company and have that analysis to look through. And finally, even the best of these have financials that smell like a baby's diaper wrapped in burritos and dog vomit. For example, OSS burned through almost $3.5 million in cash over the last year, and it was only by selling investments that it wasn't worse. This is actually pretty normal for those very small, startup-type companies to have that negative operational and free cash flow, especially when they have to spend heavily on investment capital. But key here is the company has enough of that ending cash position, that cash on hand, to give it that time to grow. And all this means you just have to do your own analysis, following the measures and analysis I'm doing in this video, and be ready for the kind of venture capital style of investing I'll explain how to do next. Back to our penny stock list though, and a new one for the channel, Knightscope Inc., ticker KSCP, at a $37 million market cap and shares just over $5 each. Knightscope claims a first-mover advantage in applying AI and robotics to public safety, revolutionizing the legacy public safety industry of security guards, officers, and the economic costs of crime. An addressable market it says is worth $230 billion through its robotics that can deter, detect, and report crime wherever and whenever it happens. And like most of these, that cash flow is god-awful here, burning through $20 million a year, but the company has been able to get that debt financing every year to close the gap. Even a fraction of that $230 billion security market would dwarf the company's revenue of $10 million last year. Forecasts are for a solid 14% growth this year, putting this one high up on our list. Guardforce AI, ticker GFAI, is the second smallest company on our list at just $24 million. I generally don't cover stocks this small. A lot of times these are so thinly traded and with so little public information that the risk here just isn't worth the potential. There's only maybe one analyst covering the stock, so research is all on investors. Guardforce provides cash management and security solutions for companies, mostly in Southeast Asia, but also expanding to Western clients like FedEx and Starbucks. The company is trying to integrate AI into its advertising and IoT solutions for customers in retail, but growth is still unproven here. It's the lowest forecasted growth on our list, and while that rock bottom valuation makes it one of the cheapest, if you were going to skip any of these, I'd say give this one a pass. It could be one of those moonshot returns, but there are also a lot of risks here. And we've still got the smallest penny stock on our list, including one with 47% sales growth and dirt cheap valuation. But investing in these kinds of 10x potential isn't like the rest of the market. This is very much like the startup investing or venture capital where I worked for years. In this type of investing, you want no more than maybe 10 or 15% of your total wealth and at most 2 or 3% in each penny stock. And that might sound like it won't amount to much. Oh, why would you only invest 1% or 2% of your portfolio in a stock that you think could 10x your money? The problem here, folks, and this is a chart I've shared before, is that these kinds of nano-cap penny stock companies can be an all or nothing investment, and you should expect about half to fail. This chart shows the percent of profitable investments and multiples on invested money for angel investors. So these are the professional startup investors, and even they see between 50 and 60% of their startups return less than they invested. That's the bar on the far left here. 5 out of 10 startups return less than is invested or nothing at all. Now that risk is a little lower here in penny stocks. These companies have already developed a product, have gone through the regulatory work to go public, and have more financial flexibility, but the two types of investing are still very similar. Many of these penny stock companies are going to fail. But then that takes us back to this investing rule. Then with just 1 or 2% of your money in a penny stock, you're not going to freak out when that price falls. In fact, you probably won't even notice it in your overall portfolio value. You won't panic and sell out. You'll be able to give the company the time it needs to grow. And even some of those losers are going to turn around for very strong returns. Because the beauty of these penny stocks is for the ones that do 10 or 20 times your investment, even a small amount is going to boost your overall portfolio. Even at just 2% of your portfolio, a stock that jumps 10x is going to boost your entire portfolio return by 20%. Put a few of those winners together and you've got a strong double-digit return on your entire portfolio. Duos Technologies, ticker DUOT, is another one I highlighted last year when it was a $28 million market cap. It's up 214%, but still that small cap potential at $87 million and under $8 a share. The company operates a railcar inspection portal with AI capabilities to inspect trains in motion, generating high-resolution images in real time to prevent derailments. Duos has used the model across more than 40 use cases, claiming a 95% reliability rate and to have already prevented those accidents. This one could get a bump from the Railway Safety Act and hopes to expand the inspection technology across other transportation verticals in trucking and airlines. Now the caveat here is there's only 2 analysts on this forecast, but if the company can get anywhere close to that 286% forecasted sales growth, this one could be a 10x return in less than a year. The valuation here is just too cheap to ignore. I'm going to reveal that top penny stock next, one trading at an insanely low valuation. But if you want the same upside, that same 10x potential return on your money in AI stocks, and with less risk, make sure you watch that prior video next, linked here in the corner. The 10 best deals in AI stocks among the biggest tech giants. But now the cheapest AI penny stock here, Ontrak Inc., ticker OTRK, is scary and exciting at the same time. The smallest company on our list at just $5.5 million. And I say scary here because this stock has gone nowhere but down over the last year, and it is in a dangerous cash position. But on a 47% forecasted sales growth and a valuation even cheaper than my favorite AI play, SMCI, this one could be worth the risk. Ontrak is using AI to transform behavioral health treatment, a $1 trillion industry affecting over 60 million people with a mental illness in the U.S. alone, and with up to half of them not getting treatment. The company is already serving nearly 70,000 members across 33 states and driving symptom improvement in as many as 6 in 10 within just 6 months. If it can prove out that model, even the current market opportunity at $97 billion would be giant versus the company's $11 million in sales. And while this forecast of 47% sales growth is just from one analyst, there is a lot of potential here. That said, it is touch and go on the cash flow situation, but this could be a 20 times your money and still be a small penny stock, and that adjusted valuation makes it worth another look. Get the weekly bow tie free with the link in the description below and stay up to date on all the stock market news and trends you need to see. Or click on the video to the right and see my favorite AI stocks to buy, the best deals for 10x returns. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.